Am I live? Well, good morning. Thank you for attending. This is our third go around. Praying that this works and that the audio comes through, which we've been having problems with in the past. But happy Monday morning, and I just want to spend a little bit of time getting everybody that's attending familiar with Geneva Financial, myself, the company, a little bit about our history, and kind of the vision and the direction that this company's going. Some of you have never heard about us other than the onslaught of emails that you've been probably getting from me over the course of weeks or maybe even months and years. But let's start with just a little bit about me and how I got here and the beginning of this company. My name is VanTrojen. I'm the founder and CEO of Geneva Financial. My past, from Seattle, Washington, born and raised, graduated at Washington State University in 1994. Got out of college, started running health clubs, did that for about 8 years. That's how I got transferred down to Arizona. And then I fell into the mortgage business unexpectedly in 2001. As most people, didn't plan this course for their career and just wound up in the mortgage business somehow, some way. As I did in 2001. When I got started, I went to work for a small broker. In fact, I was the sixth employee, the only one in Arizona. Small little broker shop. Found my way of originating loans, came from 8 years of pretty intense sales profession. So I was good at that aspect of the business, just had to find my business. Once I learned how to generate and find new business, and like anything that you're selling, once you find a willing customer, the rest was pretty easy for me. So did that, learned the business for about a year, started a branch. About my second year in, didn't really still know what I was doing in the mortgage business, but was good at sales and good at originating and all that. That's really all that mattered. And then 2006, the company that I started with, which was only 6 employees at the time, sold to a very large mortgage banking platform with about 1,500 employees at that time. And when we were acquired, the new company came in with a big bureaucratic banking mentality, and basically I'd lost my service, my products, my pricing, and even my pay to some extent. But that's kind of how the industry was moving. Lots of acquisitions going on, large banking platforms kind of starting to dominate the market. And I realized really early on that that wasn't for me. I wasn't really big on the corporate culture. I liked the small family feel that I had at my previous employer. So in 2007, I decided to start my own company, licensed in Arizona as a mortgage banker, without realizing, without knowing or foreseeing the future that's just right around the corner, the wheels were going to fall off the industry, and that the mortgage industry was going to be responsible for one of the greatest financial disasters this world has ever faced. The writing was on the wall, but never saw that it was going to happen as bad as it actually did. So the company was formed late 2007. We did our first loan, I think, in October of 2008. I think that was right about the time Lehman Brothers and Bear Stearns failed. And that's kind of when the public became really aware that the economy was in deep trouble. And again, the mortgage industry was primarily responsible for that. And so as a licensed mortgage banker in Arizona, we couldn't get any money. We didn't have any money. We were self-started, didn't have any outside capital. And so we self-funded it. In fact, I joke, I think my P&L back in January of 2008 showed our worth of at about $2,000. So it was a real rough go. And there's a reason that I'm telling this history is because, like I said, there's very few companies, in fact, none that I know of that have such a short history as Geneva Financial that have come as far as we have. I mean, there are companies like Loan Depot, but that company got off the ground with a lot of capital. We did it. This was grown from the grassroots, so to speak, with our originators, not on top of them, with them. That's a very important difference. So we managed to make it through the tough years. And one of the main reasons why we managed to make it through the tough years is because when I started the company, for the sole reason I started the company was to get away from that bureaucratic model. I wanted to be able to attract entrepreneur-minded people, people that had the discipline to be able to run their own business. And our whole concept, and again, this is for 10 years, was the same concept, was to pay the lion's share to the loan originator. I mean, they're responsible for the business. Without them, we wouldn't have any business. We're not a consumer direct company. As a corporation, we don't market to the consumer. That would be a completely different model. We market to the loan officer. And our whole goal was pay the loan officer more than anybody in the industry. And right now we still pay about twice the national standard. I think the average loan officer in the country makes about 1.25, maybe 1.5. We pay on average 250 basis points to every single loan officer in the company. To branch managers, they have the potential to make even more money. That concept has never changed. That's never changed. And not only are we going to pay people more, is we're going to offer more competitive pricing to our consumers. And those are very tough things to put together. To put those two, to pay your loan officers more than anybody else, and to give them better pricing than probably 95+% of our competition is a very difficult thing to do. And when people say, how do you do that? Because if you see my pricing, I mean, one of the biggest obstacles I have trying to recruit new loan officers is they just don't believe me. They don't believe that I could possibly pay as much as we do and offer pricing as good as we have, especially on the East Coast. Those guys on the East Coast are distrusting and they do not believe that we're going to fulfill this. But we've been doing this for 10 years. And you can ask every single loan officer in our company. We've never changed our model since the day we got started. And part of the reason for that is that in 2008, when all the compliance came raining down on this industry and all the small companies, the small brokerages and the net branches, those started going away. And they started going away because some of them were mismanaged and misrun, but a lot of them went away because they were under the impression that they couldn't make it anymore with the regulation that was upon us. It wasn't true. And then the big companies came in and basically stated that they didn't have to or weren't able to pay the loan officers as much as we used to make in the old days, is because of the compliance piece was so expensive. And while there was some truth to that, it wasn't that true. Yes, you had to hire more compliance people. There was more technology that you had to spend, but it didn't cost 100 basis points per loan. It didn't. But they used that as a money grab. The large companies, the large mortgage bankers came in here, and all of a sudden, now we go from making, 3 points on average a transaction prior to 2008, that everybody's getting accustomed to making 1.5. It's ludicrous. We've never done that as a company, never will do that as a company. Our model is always pay the loan officer the lion's share of the compensation. Well, that being said, we also want to make sure that we're hiring loan officers that are professional loan officers. That's really, really important. I'm not going to pay a loan officer 250 basis points if they don't know how to take a 1003. We need you to be able to do the bare basics. Take a 1003. Know what you're doing. Be able to spell addresses right. Going through each page, paying attention to the details. Know how to run credit. Know how to read credit. I don't think that's asking too much. Being able to run an automated underwriting system, LPDU, and then actually read your findings and precondition the borrowers for the minimum amount of documentation needed to get a file into processing, then into underwriting. It's very easy. We don't ask for a lot. We just ask you to do a little bit extremely well. And if you're able to do that, then we can pay you 250 basis points. And like I said, branch managers even more. and offer you spectacular pricing to make you more competitive than our competition. Again, not new, not a new concept, at least not for us. We've been doing this for 10 years. With that, to give you a kind of flow of our system, is professional loan officers that we're hiring. They can get a file into processing, again, with the minimum amount of documentation needed to make a credit decision. Processing is going to order out the file, order 4506Ts, appraisals, title, VOEs, so on and so forth. And then they should be able to get that file into underwriting really, really fast. And from submission into processing to your underwriting approval should take about 48 hours. Our underwriting turn times typically are only 24 hours. Very rarely are they outside 24 hours. So you can get approvals very, very quickly. Then ideally, if you're working with corporate processors, is we like the processors to clear the conditions with your borrower. No sense in having an originator doing paperwork and going to the borrower and asking them for updated pay stubs and bank statements. That's not efficiency. That's not going to help you originate more loans. By title, you're an originator. By definition, you should be going out there and finding new business, not doing paperwork. So that is our goal. If you work well in putting together clean files, and it doesn't have to be easy loans, we do plenty of difficult loans too. On topic, we don't have any overlays. In fact, the only overlay I should say that we have is on government loans. We require 600 credit score unless it's a streamline, and then we have no credit score requirements. There is no other overlay that I know of as a company that we have. So we do a great deal of challenging loans. That's not the problem. We'll do challenging loans. I pride myself on being able to do challenging loans. Not only will we do everything that the agencies and the government guidelines allow you to do, but we also are one of the first companies that actually banks in-house non-QM loans. We have multiple sources for non-QM loans and actually do these on a fairly regular basis. Down payment assistance programs, although I'm not a huge fan of those, we offer several programs in each state that we're licensed in. Reverse mortgages, open-ended reverse mortgages, we do as well. Manufactured homes, commercial division. Essentially, if it can be done, we can do it. And in almost every situation, we're going to do it at a very competitive price, far more competitive than most of our competition. So we're fast, offer a lot of programs, pay you nearly twice the national average, and have better pricing. How better to build your business than with those factors? Again, a lot of people simply don't believe that we're able to do this. Yet we have been doing it for 10 years. Why haven't you heard about us before? It's because we're small. We're not layered. We cut the fat. We stay lean. I don't have recruiters. There are no recruiters for this company, just me. And I will say that there's not a lot of layers. If you have a problem with us or anything that we're doing, you're in the mortgage business, okay? It's dysfunctional, okay? It's inherently dysfunctional. Even the best companies like Geneva Financial are going to have problems from time to time. I'm aware of that. But the difference is if you have an issue, which you're inevitably going to have from time to time, even here, whether it's with processing, underwriting, or some other something that's gone sideways on your loan, is you can reach out very easily to all the people that you would need to reach out to get support, whether it's call the processor directly, talk to the underwriter directly. You can pick up the phone and talk to them. I know that's not that unusual in this business, but somewhat. What is unusual is how many times have you been able to pick up the phone and talk to the owner of your company? Now, I hope that every time you have a little problem with a loan or an issue with one of the systems, you're not reaching out, picking up the phone and calling me, but you can. And almost every time I'm going to answer on the first go around and certainly respond back to any email that you leave or any message you leave within a 24-hour period of time, and mostly within minutes. We're not layered. People are surprised that they can get me on the phone as fast as they can, but I pride myself on that. The loan officer is our customer, not the borrower. The loan officer. The loan officer is my customer. That is what I care about first and foremost. Back to the whole concept of the company. If I give you great pricing, pay you better than anybody else, give you all the products that you could possibly want, it is your job to go get the customer, the borrower. And you should be able to do that. And you should be able to do that better here than anywhere else. What else could you possibly need? Bells and whistles? Want free toasters, shiny objects? Not here, not my deal. You want fancy websites? Pay for them. I don't care if you do. Again, if I'm paying you 250 basis points and my competition's paying you 150 basis points, you get 100 basis points spread on every single loan you do. You can certainly afford fancy websites if you think it's going to improve your business, or fancy business cards, CRMs, whatever it might be. Or you can spend that money, that difference, and go buy leads, marketing campaigns of your choice, mailing campaigns. There's so much money you're going to earn, so much spread, that you can go spend your money the way you want to. Don't let me as a company, don't have me as a company or your current employer charge you 100 basis points alone to provide you a CRM that costs them $50 a month. It doesn't make sense. But most companies will blind you over here, keep you preoccupied with these shiny objects and these fancy things while they're gouging you on your pay over here. I just met with a loan officer all morning. He's making 175 basis points. That is fantastic, especially in this market. That is very high compensation, but his prices are out of whack. So not only by doing the math would he make between $100,000 and $200,000 more per year at Geneva Financial with his current volume, he's also going to have faster turn times, and he's going to have better better pricing, which could lead to a lot more production and the ability to contact me if he ever has a problem. And if he needs help building his business, we'll get involved, we'll get back behind you, or we'll let you go and do your own thing. I'm not going to micromanage you, and I'm sure as hell not going to wake you up every single day and get you motivated to go do deals. That's on you. My pay structure and our compensation should be enough to motivate you to get out of bed every single morning because you have the ability to make so much money here. Why would you sleep in? So anyway, that's just a touch of some of the things we do. We do a lot of hard loans. We do a lot of good loans. And that's our focus, is doing good loans. I don't want to do bad loans. In our 10-year history, we've only taken one back. And that wasn't because anybody made a mistake. It's because somebody was trying to commit fraud against me. That's an impeccable record. And it doesn't mean that we're not doing challenging loans. Like I said, we do challenging loans. We wouldn't offer non-QM, DBA, or down payment assistance programs, manufactured homes, if we were scared of doing challenging loans. We do all those loans with very limited overlays. So it was short and it's brief. I hope you subscribe to the YouTube. I'm going to constantly be giving presentations on different things that are happening in the market, and I might take on a little bit different perspective than you're accustomed to, especially when it comes to marketing and views toward regulation, so on and so forth. And we'll be speaking a lot about that in the future. Also, if you ever want to contact me directly and you want to find out if what I'm saying is true and have a one-on-one conversation with me, call me. My number is 480-368-2000. That's my office line. Or if you want to call me personally on my cell phone, it's 602-793-6383. I welcome you to call me anytime. In fact, you can call me right when this broadcast is over, and I will answer the phone. I hope to hear from you, and we'll be definitely talking to you again in the near future. Thank you very much for your time.